Good morning, good afternoon, or good evening, and welcome to the TGI. Thank God it's Friday. It was Friday the 13th. Woo, Friday the 13th. It's the TGI. Thank God it's Friday the 13th. Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. It's going to be a whistle stop tour today around the major events that are affecting markets right now. We're going to look at the factors such as geopolitics. We're going to take a look at the central bank stuff, the data, anything that's going on that's going to affect the markets. And we'll have a quick look at the charts as well. It's going to be a quick one today, guys, because it's not particularly a huge amount to say. I'm going to look back before I look forward just quickly. So here is, have I got yesterday's or today's on? Yesterday's, here we go. Yesterday's data. The main focus yesterday, we did have the PPI data out in here, kind of slightly mixed near the month on month on the core above, and then the core year on year below, and then the headline number slightly hotter than expected, so slight negatives there. But the other real focus was on the ECB. ECB did as expected, another rate cut, second rate cut of the year. No real shocks there with them delivering the rate cut. So, no surprises from the ECB, 25 basis points down. And there's an article confirming that European central bank cuts interest rates again and lowers growth, but they did lower the growth forecast, so that's slightly disappointing there, but not to the point of a hard landing. Looking into today, it's fairly light. We've had not too much out of Europe and Asia on the overnights in here. And we don't really get anything until Michigan consumer sentiment. No early data today. We've got the later data, 10 o'clock Eastern time, Michigan consumer sentiment, preliminary data for September. So it is fresh data, preliminary data for September. So is worth having a look at that. Can move markets, doesn't usually have a big impact, but can have a short-term impact. 5 things to start your day. It's really what's happening in the markets as opposed to any factors that are influencing. So the treasuries are rallying up. So treasuries up equals yields lower. And the dollar weakening on those lower yields. Investors continue to debate the size of what interest rate the Fed will deliver next week. Remember the meeting next Tuesday, Wednesday. We get the result on Wednesday. Swaps rates are now pricing in, I think, 30% on the Fed rate cut. So it's getting a lot closer. We'll take a look at that as we go forward. So, there is a growing debate. And that comes from an article in the Wall Street Journal, by the way. So, we'll come to that shortly, but article in the Wall Street Journal saying that the Fed are apparently hotly debating whether it's going to be 25 or 50. The weaker dollar, remember, dollar weakness equals gold strength. So the weaker dollar has seen gold hit a new record high on the overnights in here. It's 25% up this year. And on the back of dollar weakness, we're seeing dollar resurgence on 50 basis points cuts from the Fed. We're seeing bullish wages on the Japanese currency too. So dollar going down, yen going up. So the yen strengthening. But we're also seeing the dollar weaken against Australian dollar, Swiss franc, offshore Chinese yuan. So across the board in here. But particularly against the yen. And that dollar yen move lower in here could be significant to in this. So we're also seeing gold breaking higher. Boeing strike, not really big for us in here. Software fortunes, Adobe shares sliding. Obviously, any AI related uplift, not really going to impact onto us. So just running through kind of what I've covered there anyway. Traders revive chance of high point red cut. Swaps prices pricing in 30%. On the back of this Wall Street Journal article in here. And look, futures also inching higher. So bonds up. Stocks up overnight, dollar bonds up in price, down in yield, dollar weakening on the back of that, and futures inching higher as hopes of a bigger rate cut coming out of the Fed next week. And there's the Wall Street Journal. I don't actually have access. I think I've got access on that on Apple Pay, on not Apple Pay, on Apple News. But I don't have access to it here. But there's basically just outlining that the Fed are in a debate whether they go big or just go regular 25 on the first rate cut. A golden Fed cut, a similar story in here from Reuters. Just what demonstrated just 24 hours ago, investors coming to terms with the idea that a half point rate cut next week from the Fed was unlikely, and a quarter point was much more in line. And a couple of articles by closely followed correspondents in the Financial Times and the Wall Street Journal overnight, along with blah, blah, blah. But anyway, I'm not going to carry on that, but there you go. Treasury is up, as we've already said. Traders mull size of rate cuts in here. A former Fed governor doubly sees case for half point cut in here, but he's a former Fed. Remember, former being the key word there. So hedge funds add bets on a yen rally. So as we said, dollar yen down there, buying Aussie and Swiss franc franc puts versus the yen. So buying yen in here, and gold hitting a record high on ECB outlook, and Fed's long-awaited pivot are adding to the gold rally in here. Dollar drops, gold hits record again. Same thoughts. Investors mull coin toss Fed decision. So on the overnights in here, Asian equity indices mixed with the Japanese Nikkei down about 0.7, and the Hang Seng up 0.75% in here. In Europe, we're up across the board, 0.3 on the UK FTSE, 0.5% on the German DAX, and 0.25% on the French CAC. And on the overnights in here, you can see edging higher, nearly 0.25% on the S&P, and 0.2 up on the Nasdaq. Similar on the Dow Jones. Quick look on the Fed watch tool, so you can see this is the bet in here. So 43%. Remember, this has been sitting around 30.70, or even a little bit below that. Now we're up at 43.57. So it is, as it says in that other article, a bit of a coin toss in here. So, and by year end, we are now looking at, here's the highest probability in here, 125 basis points down. That is right. So the market's certainly pricing in here potential for 50-50-25 in here. So 125. And we've got, it's 55% chance of 125 basis points down or more. And you can see that also in, we're just sort of nudging lower to lower yields in here. This is the US 10-year yield nudging to lower yields, and obviously bond prices across the board in here. We did get a dip lower on the 30-year actually yesterday, but bond prices pretty much across the board staying very elevated in here. We've had a rebound from these, like the slight setbacks that we see on the charts here from last night. And I'm clinging to, but I'm kind of abandoning this a little bit on the overnights in here, because we got a further pop higher in here on the overnights in here. So bearish threat staying for now. I've got in the articles, but I'm really pivoting towards now there is risk. Here's like the overnight, it's creeping higher on the overnight. We've got this base structure now, like double bottom put in when we took out that spike high through the CPI data. And I do think now that there's a risk that we do creep higher. I mean, the underlying theme is bearish still, but I think we're about to probably shift that. If we get any kind of upside today, I'm going to be shifting that short-term outlook to more bullish. I think there is risk we go and challenge this area today. So on the S&P, it's up around 56.70, and on the Nasdaq, this area up here around 19,680, 19,700 kind of area. So I think that's kind of the upside. Not a huge rally, but I do think there's further upside potential going into the end of the week, ahead of the Fed next week. As I said, I'm going to wish you all a great trading day. I'm going to wrap it up there, guys. Take care, stay safe. Watch out, it's Friday the 13th. I'll be back with you on Monday. Have a great weekend too. I'll be back with you on Monday with another Bull versus Bear webinar.